Shingirai here with an update on global current affairs. The week ahead seems to have quite a bit on the dashboard, and of course top of mind would be the 1st of May upcoming deadline for OPEC plus oil production output cuts, and preliminary evidence suggests that Saudi Arabia and Kuwait have already begun to tighten the tabs on their oil production output. It's been a couple of tough weeks for crude oil, with downward pressure from WTI spilling over to Brent amidst storage concerns for WTI crude oil and overall demand concerns given COVID weakness for crude oil in general, and that would see WTI trading south of $11 a barrel and Brent crude trading south of $20 a barrel. Earnings season for Q1 continues in earnest, and what we see here in the US market is that FANG stocks have really been playing the role of supporting the US equity markets and now represent about 20% of the index. Banks in Europe have been coming out with their provisions for bad debts, given the possibilities of companies defaulting on credit due to weaker business revenue given COVID weakness and widespread lockdowns, and these provisions have been more generous than what would have seen under normal circumstances, understandably. Another thing coming up in the week ahead would be some countries reporting their GDP, and just as a refresher, China GDP for Q1 came out with a contraction of about 6.8%, so we'll be watching keenly to see GDP numbers coming out of Japan, Spain, Italy, France, the wider Euro area, and the US, and current global expectation would be a contraction in GDP of more than 3%. In terms of market performance, the S&P 500 and the Dow Jones Industrial closed in the green for about 1.5% in yesterday's trading, whilst in today's trading the Hang Seng closed in the positive 1.22%, and the Shanghai Composite was in the negative minus 0.19%, and the Nikkei was negative 0.06%. In today's trading, the FTSE 100 seems to be trading north of 1.7%, and the Euro Stoxx 50 seems to be trading north of 1.9%.